Spot Ether exchange-traded funds saw 5 straight days of outflows this week.
These funds shed $952 million total, with over $787 million lost in just 4 days.
This follows a record August where these funds gained $3.87 billion.
Meanwhile, Bitcoin exchange-traded funds experienced $751 million in net outflows, according to Soso Value data.
Friday saw the biggest drop, with $446.71 million leaving Ether-linked funds.
Spot Bitcoin exchange-traded funds, however, saw $246.4 million in net inflows over the past week.
This contrasts with last month when Bitcoin funds experienced $751.1 million in net outflows.
Ether is up over 16% in the past month, but down 1.8% this past week, trading just below $4,300.
The United States jobs report disappointed expectations, showing fewer jobs added than predicted.
This increased expectations of Federal Reserve rate cuts.
However, Bitcoin has not rallied as anticipated, remaining below $112,000.
This suggests a possible further decline in price.
The August non-farm payrolls report revealed significantly fewer job additions than forecasted.
Several sectors experienced job losses, while others like health services showed gains.
Following the jobs data, the probability of a Federal Reserve rate cut increased significantly.
Upcoming revisions to earlier jobs reports are expected to further influence rate cut expectations.
Bitcoin dominated conversations this week with discussions about its role as digital gold and long-term investment appeal.
Ethereum also featured prominently in promotional materials for new tokens.
Dogecoin saw increased attention due to a potential United States-listed exchange-traded fund and mining expansion.
Tether drew interest due to its strategy to invest more heavily in gold.
Bitcoin discussions also emphasized self-custody and the use of nodes.
Ethereum continues to play a role in how new products are presented to crypto audiences.
Tether executives described gold as natural Bitcoin.
Multiverse X discussions centered on concerns about increased EGLD supply and projects leaving for other chains.
India and the United States lead the world in cryptocurrency adoption this year.
This is according to Chainalysis' 2025 Geography of Cryptocurrency report.
India ranks first across all measured subcategories.
The United States is second overall due to increased institutional participation.
Asia Pacific is the fastest growing region with transaction volume up 69%.
This growth is driven by activity in India, Pakistan, and Vietnam.
Stablecoins like Tether and Circle remain important for global adoption.
Bitcoin is still the primary entry point for fiat on-ramps.
Capital markets are in flux as monetary policy highlights a fragmented global economy.
Blockchain offers a superior alternative for borderless transactions with digital assets.
It benefits both financial institutions and the unbanked.
Institutions gain speed and scalability, while the unbanked gain access and equity.
Franklin Templeton tokenized its first money market fund.
This reduced transaction costs significantly, demonstrating blockchain is efficient.
This same technology can facilitate faster, cheaper remittances.
Major institutions and aid organizations are using blockchain technology. Dogecoin price rose nearly 1% between September 5th and 6th as volume jumped 29% above weekly averages.
A midday sell-off to $0.213 United States dollars was quickly absorbed by buyers.
This underscores institutional support and exchange-traded fund-driven speculation.
Traders now view $0.22 United States dollars as the key breakout threshold.
Dogecoin reached a local high of $0.2157 United States dollars, its strongest level in weeks.
Trading volume was 29.19% above weekly benchmarks.
Reports surfaced of a $200 million United States dollar Dogecoin Treasury initiative led by Elon Musk's legal counsel.
Rex shares and Osprey funds reportedly filed the first United States Dogecoin exchange-traded fund applications. Tokenization is the next big step in how financial assets are housed.
It offers advantages over existing traditional structures.
Tokenization converts ownership of assets into digital tokens on a blockchain.
These assets can range from stocks and bonds to real estate and art.
This model could reshape how investors access and manage assets.
Enhanced liquidity is a key benefit, enabling 24/7 trading.
This could open up secondary markets for illiquid private assets.
Faster settlements eliminate multi-day delays common in today's markets. Brazil's largest private asset manager, Itaú, has launched a dedicated crypto division.
It is headed by João Marco Braga da Cunha, formerly of Hashdex.
This new division will manage over $21.6 billion.
It joins existing groups focused on equities, credit, and systematic strategies.
Itaú has been gradually entering crypto markets since 2022.
They currently offer a Bitcoin exchange-traded fund and a retirement plan with Bitcoin exposure.
Itaú also provides direct trading of Bitcoin and Ether through its mobile application.
The new unit is expected to offer products ranging from fixed-income instruments to higher-risk funds. Stripe Chief Executive Officer Patrick Collison stated stablecoins are gaining adoption because they offer businesses faster, cheaper, and more reliable payments.
He said this in a Hacker News thread after Stripe and Paradigm launched Tempo, a blockchain for stablecoin payments.
Collison wrote that Stripe had been disappointed with crypto payments utility for much of the past decade.
He said their view shifted as more businesses began using stablecoins for routine financial activity.
Collison pointed to Bridge, the stablecoin infrastructure provider Stripe acquired.
He said SpaceX uses it to manage money flows in hard-to-reach markets.
Latin American fintech Dollar app relies on it for banking services.
An Argentinian bike importer uses Stripe to pay suppliers.
Congress is back from summer recess, and we are entering the final 4 months of 2025.
This year, the Genius Act addressing stablecoins has already passed.
However, a larger market structure bill is still in progress.
Congress has other pressing issues, including a funding bill deadline.
The focus is on market structure legislation.
The House passed the Clarity Act, but the Senate is taking a different approach.
The Senate Banking Committee is working on defining ancillary assets and broader crypto guidelines.
This legislation requires bipartisan support to pass the Senate.
Adam Back, a Bitcoin developer, has entered the debate about JPEG spam on the Bitcoin blockchain.
He argues that it undermines Bitcoin as money.
Back believes Bitcoin is owned by humanity, with developers acting as stewards.
He says users need consensus for material network changes.
JPEG inscriptions, images stored on Bitcoin, have increased 20% since May.
Fees from these inscriptions total approximately $777 million.
Proponents argue that as long as users pay for block space, it is a valid use of the network.
They say Bitcoin should not dictate its uses, upholding decentralization.
Belarus President Alexander Lukashenko is urging regulators to finalize rules for cryptocurrencies and digital tokens.
He called for transparent rules and new oversight mechanisms.
Lukashenko argued that Belarus needs to keep up with global crypto adoption while protecting investors and financial stability.
A state control committee report revealed violations in crypto platform transaction records.
Lukashenko said that in roughly half of the cases, funds transferred abroad by Belarusian investors did not return.
He described this situation as unacceptable.
The president noted that technology is advancing faster than legislation.
He instructed regulators in the high-tech park to draft clear rules for businesses.
World Liberty Financial states it froze wallets, including Justin Sun's, to protect users from phishing.
The project claims the action was not intended to suppress trading activity.
World Liberty Financial reported 272 wallets were blacklisted.
Approximately 215 wallets were linked to phishing, with 150 compromised via support.
Justin Sun's World Liberty Financial address was frozen after small dispersion test transfers.
These transfers occurred between his wallets after he claimed unlocked tokens, and were not sales.
Nansen founder Alex Svanovic noted Sun's transfers did not align with World Liberty Financial's token decline.
On-chain data indicates a $12 million World Liberty Financial transfer from HTX to Binance by a third party.
Cardano retail investors have become bearish after weeks of price declines.
This creates an opportunity for large investors, known as whales, to buy.
Data from Santiment shows the ratio of positive to negative comments about Cardano reached its lowest point in 5 months.
This sentiment shift coincided with a 5% price rebound.
This suggests that the traders who sold out of frustration may have created a temporary low point in the price.
Historically, Cardano price increases have started when retail sentiment is at its lowest.
A similar situation occurred in mid-August, leading to a price surge.
Conversely, very high levels of optimism have often come before sharp price drops.
MicroStrategy missed being added to the Standard & Poor's 500 index despite a strong quarter and meeting all criteria. Inclusion would have exposed millions of investors to the company. Robinhood, with growing cryptocurrency ambitions, was included in the Standard & Poor's 500 index. The changes will go into effect on September 22. Robinhood will now be added to this coveted list. A new draft bill circulating in the United States Senate aims to establish regulatory workings for cryptocurrency markets. It also addresses how federal regulators can support tokenization in financial markets. This new Senate version provides strong legal protections for those involved in developing and maintaining distributed ledger systems. The bill proposes a joint study by the Securities and Exchange Commission and the Commodity Futures Trading Commission on tokenizing assets. The bill emphasizes that tokenized securities remain securities. While circulating, it is unclear if this version will garner enough support to pass. That's a wrap on this episode of CryptoCast Daily. Thanks for tuning in. We'll catch you next time with more market updates, bold predictions, and fearless crypto insights.